Peace and love, family. I just want to talk a little bit about tax assessment. I'm learning more about tax, what this is all about, and I found some very interesting thing that I'd like to share with you guys. Um, One of the most interesting thing that really caught me is the definition of purchase. Upon researching, I found that the definition of purchase actually is the acquisition of asset for valuable consideration. Now, what the hell does that mean? Okay, well, the definition of acquisition is the gaining of possession or control of something. To gain possession or gain control. So, a purchase is the gaining of a possession or control of an asset for valuable consideration. Now, what this means? Now, let's use a scenario, right? There's a guy right here. He wants to go to the market to purchase, right? So he's in this event right here. He's going to transfer this security right here, which is paper money, $200, right? And when he transfers it over here to the market, he's going to get some stuff in return, but he's going to get paper. He's giving one paper for another paper, right? Yeah, he's getting some other stuff too, like groceries, tangible things. But those tangible things are just to compel performance, to compel this type of activity. Because if he didn't get any tangible things and it's just changing papers, then nothing would happen. But he gives $200 worth of securities, which is an asset, which he can claim as an asset. And in return, the market gives him a receipt. Now, the receipt is a very interesting thing because it has the title of the market. So it would say 123 Supermarket. And the receipt also has a TIN number. And it has listed a portion of its inventory, a portion of it, of a stock or shares which he had. So it's a portion of stock and shares right here. Boom. So this now becomes a certificate of title and a stock certificate in a way, technically. And this is also outlining the value of this stock certificate for exchange for this one right here. So let's say right here it says it's 185 plus 15 tax, right? So I would say that this means that what's happening here is that this right here is the interest, $15, that is owed to this guy right here, right? So he holds an interest over this by giving them 185 plus 15% interest. So this is basically, so what's happening here is an acquisition of an asset. So now let's say now this guy right here, he wants to report this event. So there's a form called 1099A, which is a acquisition of secured property in the United States, right? And that's something that a lot of people are using now to report this purchase event. Because now this guy right here, he can report it to these guys right here. So he says, look, I want to report to you guys an acquisition of an asset. I made an investment. I invested in 123 Supermarket, and I invested a security of $200, worth $200. And I have a evidence right here, a certificate of title and a stock certificate to prove it, right? So what I would like, Mr. Tax Department, is I would like to report this so that you could go get my initial investment back. And what I'm going to do, I'm going to give you rights to the interest. You can keep the interest. Keep the interest from this transaction and just give me what is owed to me. And here you go. Here's the stock certificate, boom, which was somewhat like a collateral that they gave this guy right here in exchange for this asset. All right. So now I'm going to give you back the collateral. Here it is, the stock certificate. I give you the right to collect the interest. He says, well, perfect. He says, the tax department loves that. He says, okay, perfect. I will go do that. So the tax department comes here and says, okay, instead of asking where's the interest, says, where is my tax? All right. So that's the tax is basically the interest that is owed to this guy right here who made an investment. Right. So now, in order for this guy to get something back, to balance the books, maybe what needs to be happened too is now, where did he get this $200 from? Well, he would have to report it as an income. Hey, I got an income of $200, by the way, but that income was invested right here. And so that's why he now has the obligation of paying the tax to you. Because I got the income and there's some interest involved in there from this and another individual that I got it from, but I'm passing it down to this. So I'm doing that tax avoidance. I'm transferring the obligation to pay the tax over to 123. Therefore, now this guy right here has the rights to collect the interest, call it tax, boom. But at the same time, this guy is gonna do is to balance the books, he's gonna also send a voucher to them of this amount. Why a voucher? Because a voucher is a negotiable instrument. So that negotiable instrument will be accepted right here as a credit. So that is for these two books right here, the account from this and the account from this, they need to be credited. So the tax department is going to use these negotiable instruments and certificates of titles and keep the interest, the tax, but balance the books, right? So remember, in every income, so he got an income of $200, that created brand new credits which didn't exist because it created an account. So it's his job to report the income to him, and so that way he can then tell the treasury to add more credits to the treasury account so it can sustain a liability that was created right here. And therefore, he needs to also report an income because, again, a debt was created. So in order for there to be credits to withstand the debt, you need to report it to the tax. So what we're doing is every purchase transaction, what is happening is that new account is being opened and new credits is manifesting into society. And if new credits are manifesting in society, now it needs to be reported to the main account or record holder, which is the treasury and the tax, so that they can add that new credits that are coming into existence and then use those credits to discharge certain liabilities and obligations which came from those credits being manifested through the income. So I don't know if this makes sense to you, but so far it is what I got. Obviously, there's a lot more to learn. There's so much more to say about this whole situation right here. This is just a small portion. But I hope this helps to put a little bit things in perspective. I'm just sharing what I'm learning so far. Again, this can change tomorrow, day after. There's always something new to change. But so far, it's kind of like what I'm understanding of all of this. So hope this makes sense. Peace and love.